How to get started with a high-yield savings account. Are you tired of seeing your savings sit idly in a traditional savings account, earning little to no interest? Do you want to explore a simple and safe way to earn a higher rate of return on your savings? If so, you're in the right place. This book is designed to help you get started with a high-yield savings account. Whether you're a seasoned investor or just getting started, the information in this book will guide you through the process of opening and managing a high-yield savings account. In this book, you will learn about the benefits of high-yield savings accounts, such as earning a higher interest rate, having easy access to your money, and keeping your money safe. You'll also learn about the potential drawbacks of high-yield savings accounts, such as minimum balance requirements and limited withdrawals. We'll cover how to find the best high-yield savings account for your needs, including comparing interest rates and account features. We'll also walk you through the process of opening an account, depositing funds, and managing your account online. At the end of this book, you'll have the knowledge and tools you need to confidently manage your high-yield savings account and make your money work harder for you. So, let's get started. Chapter 1. The history of high-yield savings accounts. High-yield savings accounts are a relatively recent financial innovation, with the first accounts of this type appearing in the 1980s. Before this, traditional savings accounts typically offered low interest rates, making it difficult for savers to earn meaningful returns on their funds. The introduction of high-yield savings accounts can be traced back to a deregulation of the banking industry in the United States in the 1980s. This deregulation allowed banks to offer a wider range of interest rates on deposit accounts, including higher rates for savers. In the early days of high-yield savings accounts, they were primarily offered by online banks and credit unions, as traditional brick-and-mortar banks were slow to adopt this new type of account. However, as the popularity of high-yield savings accounts grew, traditional banks began to offer them as well. The growth of high-yield savings accounts can also be attributed to the increasing importance of internet banking and digital financial services. With the rise of online banking, it became easier for consumers to research and compare different savings account options, leading to increased competition among financial institutions and higher interest rates for savers. Today, high-yield savings accounts are a popular savings option for many individuals and families. They offer higher interest rates than traditional savings accounts, while still providing easy access to funds and FDIC insurance protection. Chapter 2. Understanding high-yield savings accounts. If you're tired of earning a low interest rate on your savings, a high-yield savings account may be the solution you're looking for. But before you jump in, it's important to understand what high-yield savings accounts are, how they work, and what benefits they offer. A high-yield savings account is a type of savings account that offers a higher interest rate than traditional savings accounts. This means that your money can grow faster, and you can earn more interest over time. High-yield savings accounts are typically offered by online banks or credit unions, although some traditional banks also offer them. High-yield savings accounts work like traditional savings accounts in many ways. You deposit money into the account, and the bank or credit union pays you interest on your balance. The difference is that high-yield savings accounts offer a higher interest rate than traditional savings accounts, which means you can earn more interest over time. The interest rate on a high-yield savings account is typically variable, which means it can change over time based on market conditions. However, many high-yield savings accounts offer a guaranteed interest rate for a certain period of time, such as 6 months or a year. One of the main benefits of high-yield savings accounts is the higher interest rate. This means that your money can grow faster and you can earn more interest over time, which can help you reach your savings goals more quickly. Another benefit of high-yield savings accounts is that they are typically FDIC insured, which means that your deposits are protected up to $250,000 per depositor, per insured bank or credit union, in case of bank failure. This makes high-yield savings accounts a safe place to keep your money. Finally, High-yield savings accounts often have easy online access and mobile apps, making it simple to manage your account and make transactions from anywhere. Drawbacks of high-yield savings accounts. While high-yield savings accounts offer many benefits, they also have some potential drawbacks to consider. For example, some high-yield savings accounts may require a minimum balance in order to earn the higher interest rate. This means that you may need to maintain a certain balance in your account in order to avoid fees and earn the higher interest rate. In addition, high-yield savings accounts may have limits on the number of withdrawals you can make per month. This means that if you need to access your funds frequently, a high-yield savings account may not be the best option for you. Chapter 3: Choosing the right high-yield savings account. Now that you understand what high-yield savings accounts are and how they work, the next step is to choose the right account for your needs. Here are some key factors to consider when choosing a high-yield savings account. Interest rates. One of the most important factors to consider when choosing a high-yield savings account is the interest rate. The higher the interest rate, the more money you'll earn on your savings. However, it's important to remember that interest rates can change over time, so be sure to check the current rate before opening an account. Fees. Some high-yield savings accounts charge fees, such as monthly maintenance fees or transaction fees. Make sure you understand any fees associated with the account and factor them into your decision. Minimum balance requirements. Some high-yield savings accounts require a minimum balance in order to earn the higher interest rate. Make sure you understand the minimum balance requirement and that it fits with your savings goals. Withdrawal limitations. Many high-yield savings accounts have limits on the number of withdrawals you can make per month. Make sure you understand the withdrawal limitations and that they fit with your needs. If you need frequent access to your funds, a high-yield savings account with withdrawal limitations may not be the best choice. Online and mobile banking. Many high-yield savings accounts are offered by online banks or credit unions, which may offer convenient online and mobile banking services. Make sure you understand the online and mobile banking options available with the account and that they fit with your needs. Customer service. Finally, make sure you choose a high-yield savings account with good customer service. You want to be able to get help quickly and easily if you have any questions or issues with your account. Comparing high-yield savings accounts. To find the best high-yield savings account for your needs, it's important to compare different accounts. Look for accounts with competitive interest rates, low fees, and convenient online and mobile banking services. You can use online comparison tools to help you compare different accounts and find the best one for you. Chapter 4: Opening and managing a high-yield savings account. Once you've chosen the right high-yield savings account for your needs, the next step is to open and manage your account. Here are some steps to take to get started. 1. Gather the necessary information. To open a high-yield savings account, you'll typically need to provide personal information, such as your name, address, social security number, and date of birth. You'll also need to provide information about the bank or credit union where you'll be transferring funds from. 2. Apply for the account. You can typically apply for a high-yield savings account online. Follow the instructions on the bank or credit union's website to complete the application process. You may also need to sign and return some documents to verify your identity and authorize the transfer of funds. 3. Fund your account. Once your account is approved, you'll need to transfer funds into it. You can typically do this by linking your high-yield savings account to your checking account or by making a wire transfer. 4. Set up automatic transfers. To make the most of your high-yield savings account, consider setting up automatic transfers from your checking account. This will help you save money on a regular basis and ensure that you're earning the highest interest rate possible. 5. Monitor your account. Once your account is set up and funded, be sure to monitor it regularly. Check your balance and interest rate to ensure that everything is working as expected. You may also want to set up alerts to notify you of any changes to your account. 6. Manage your account online. Many high-yield savings accounts offer online and mobile banking services. Take advantage of these tools to manage your account, make transfers, and monitor your balance from anywhere. 7. Review your account periodically. Finally, be sure to review your high-yield savings account periodically to ensure that it's still the best option for your needs. If you find that you're not earning as much interest as you'd like or that the account has become too costly, consider switching to a different account. Chapter 5. Maximizing your high-yield savings account. Now that you've opened a high-yield savings account and started earning a higher interest rate on your savings, it's time to maximize the benefits of your account. Here are some tips to help you make the most of your high-yield savings account. 1. Set savings goals. One of the best ways to make the most of your high-yield savings account is to set savings goals. Determine how much you want to save and by when, and create a plan to achieve your goals. Make sure your goals are specific, measurable, and realistic. 2. Make regular deposits. To earn the most interest on your savings, it's important to make regular deposits into your high-yield savings account. Set up automatic transfers from your checking account or create a savings plan to ensure that you're making regular contributions. 3. Avoid withdrawals. Most high-yield savings accounts have withdrawal limitations, and for good reason. To earn the highest interest rate possible, it's important to avoid making withdrawals from your account as much as possible. Instead, try to build up an emergency fund in a separate account to cover unexpected expenses. 4. Monitor interest rates. Interest rates on high-yield savings accounts can fluctuate over time, so it's important to monitor your account's interest rate and compare it to other accounts on a regular basis. If you find that your account's interest rate has dropped significantly, consider switching to a different account with a higher rate. 5. Take advantage of bonuses. Some high-yield savings accounts offer sign-up bonuses or other promotional offers. Take advantage of these bonuses if they make sense for your savings goals and don't require you to deposit more money than you can afford. 6. Compare fees. Even if you've chosen a high-yield savings account with low fees, it's important to compare fees on a regular basis. If you find that your account's fees have increased significantly or that other accounts offer lower fees, consider switching to a different account. 7. Consider CDs or other investment options. High-yield savings accounts are a great option for short-term savings goals, but if you're saving for the long term, consider other investment options, such as certificates of deposit or investment accounts. These options may offer even higher interest rates, but may require a longer commitment. Chapter 6. Risks and considerations of high-yield savings accounts. While high-yield savings accounts offer many benefits, there are also some risks and considerations to keep in mind. Here are some things to be aware of when using a high-yield savings account. 1. Interest rate fluctuations. Interest rates on high-yield savings accounts can fluctuate over time, which can impact the amount of interest you earn. It's important to monitor interest rates and compare them to other accounts on a regular basis to ensure that you're still earning a competitive rate. 2. Limited liquidity. Most high-yield savings accounts have withdrawal limitations, which can impact your ability to access your funds quickly in case of an emergency. Make sure you have a separate emergency fund to cover unexpected expenses. 3. Fees. While high-yield savings accounts typically have lower fees than traditional savings accounts, there may still be fees associated with the account. Be sure to read the fine print and compare fees to other accounts to ensure that you're getting the best deal. 4. FDIC insurance limits. High-yield savings accounts are typically FDIC insured, which means that your deposits are protected up to a certain amount in case the bank or credit union fails. However, it's important to be aware of the FDIC insurance limits and ensure that your deposits are within the limits to maximize protection. 5. Inflation risk. While high-yield savings accounts offer a higher interest rate than traditional savings accounts, the rate may not keep up with inflation over the long term. This means that the purchasing power of your savings may decrease over time. 6. Tax implications. Interest earned on high-yield savings accounts is generally taxable at the federal and state level. Be sure to consult with a tax professional to understand the tax implications of your high-yield savings account. 7. Opportunity cost. While high-yield savings accounts offer a higher interest rate than traditional savings accounts, they may not be the best option for long-term investments. Consider other investment options, such as stocks or bonds, for long-term savings goals. Chapter 7. How to choose the best high-yield savings account. With so many options for high-yield savings accounts, it can be difficult to know which one is the best for you. Here are some factors to consider when choosing a high-yield savings account. 1. Interest rate. One of the most important factors to consider when choosing a high-yield savings account is the interest rate. Look for an account with a competitive interest rate that will help you earn more on your savings. 2. Fees. Consider the fees associated with the account, such as monthly maintenance fees or transaction fees. Look for an account with low or no fees to help you save more. 3. Minimum balance requirements. Some high-yield savings accounts require a minimum balance to earn the advertised interest rate or to avoid fees. Make sure you can meet the minimum balance requirements before opening the account. 4. Withdrawal limitations. Most high-yield savings accounts have limits on the number of withdrawals you can make per month. Make sure the withdrawal limitations won't impact your ability to access your funds when you need them. 5. FDIC insurance. Look for a high-yield savings account that is FDIC insured to protect your deposits in case the bank or credit union fails. 6. Online access. Many high-yield savings accounts are offered by online banks, which can offer convenience and flexibility. Consider whether online access is important to you when choosing an account. 7. Customer service. Look for an account with good customer service and support in case you have questions or issues with your account. 8. Reputation. Research the bank or credit union offering the high-yield savings account to ensure it has a good reputation and is financially stable. Chapter 8. Tips for maximizing your high-yield savings account. A high-yield savings account can help you earn more on your savings, but there are ways to maximize your earnings even further. Here are some tips for getting the most out of your high-yield savings account. 1. Set up automatic deposits. One of the best ways to maximize your savings is to set up automatic deposits from your checking account into your high-yield savings account. This can help you save money regularly without having to think about it. 2. Keep track of your balance. Check your balance regularly to make sure you're meeting any minimum balance requirements and to see how much interest you're earning. 3. Take advantage of sign-up bonuses. Some high-yield savings accounts offer sign-up bonuses for new customers. Be sure to check for any current promotions and take advantage of them if they align with your needs. 4. Consider using multiple accounts. If you have different savings goals, you may want to consider using multiple high-yield savings accounts. For example, you could have one account for your emergency fund and another for a down payment on a house. 5. Keep an eye on interest rates. Interest rates can change over time, so it's important to keep an eye on the rate you're earning and compare it to other high-yield savings accounts. You may want to switch to a new account if a better rate becomes available. 6. Avoid withdrawal penalties. Many high-yield savings accounts have penalties for early withdrawals, so be sure to check the terms of your account before making any withdrawals. 7. Reinvest interest. If your high-yield savings account allows for reinvestment of interest, consider doing so to help your savings grow even more. Chapter 9. Understanding the risks and limitations of high-yield savings accounts. While high-yield savings accounts offer many benefits, there are also risks and limitations to be aware of. Here are some important considerations to keep in mind. 1. Inflation risk. Although high-yield savings accounts offer higher interest rates than traditional savings accounts, they may not keep up with inflation. This means that the value of your savings may decrease over time in real terms. 2. Market risk. While high-yield savings accounts are generally considered safe, they are still subject to market risk. For example, if interest rates fall or the financial institution offering the account experiences financial difficulties, your earnings could be impacted. 3. FDIC insurance limits. While FDIC insurance can help protect your deposits, it is important to note that there are limits to how much coverage you can receive. As of 2023, FDIC insurance coverage is up to $250,000 per depositor, per insured bank. 4. Withdrawal limitations. Most high-yield savings accounts have limits on the number of withdrawals you can make per month. This could impact your ability to access your funds when you need them. 5. Limited growth potential. While high-yield savings accounts can be a good option for short-term savings, they may not offer the same growth potential as other investment options, such as stocks or bonds. Chapter 10. Alternatives to high-yield savings accounts. While high-yield savings accounts can be a great option for those looking to save money, there are other alternatives that may better suit your financial needs. Here are some alternatives to consider. 1. Money market accounts. Similar to high-yield savings accounts, money market accounts offer higher interest rates than traditional savings accounts. However, they often require higher minimum balances and may have more fees. 2. Certificates of deposit. CDs are a type of savings account that offer higher interest rates than savings accounts in exchange for locking up your funds for a set period of time. They are a good option for those with longer-term savings goals. 3. High-yield checking accounts. Some financial institutions offer high-yield checking accounts that can offer competitive interest rates while still allowing you to easily access your funds. 4. Investment accounts. If you're looking to grow your wealth over the long term, investing in stocks, bonds, and other securities can be a good option. However, this involves more risk and requires a longer time horizon than savings accounts. 5. Debt repayment. Paying off high-interest debt, such as credit card balances, can be a good alternative to savings accounts as it can help you save money on interest payments over time. Chapter 11. When not to open a high-yield savings account. While high-yield savings accounts can be a great option for many, there are certain situations where they may not be the best choice. Here are some instances when you may want to consider other options. 1. You have high-interest debt. If you have high-interest debt, such as credit card balances or personal loans, it may be more beneficial to focus on paying off that debt before opening a high-yield savings account. This is because the interest you pay on your debt is likely to be higher than the interest you earn on your savings. 2. You have no emergency fund. If you have no emergency fund, it's important to prioritize building one before opening a high-yield savings account. This is because your emergency fund provides a safety net for unexpected expenses or income disruptions, and should be easily accessible in a low-risk account. 3. You have limited funds to save. If you have limited funds to save, a high-yield savings account may not be the best option as it typically requires a minimum deposit and minimum balance to earn the advertised interest rate. In this case, a traditional savings account with no minimum deposit or balance requirements may be a better option. 4. You have long-term savings goals. If you have long-term savings goals, such as saving for retirement or a down payment on a house, a high-yield savings account may not offer the same growth potential as other investment options, such as stocks, bonds, or mutual funds. 5. You prioritize liquidity over yield. If you prioritize having easy access to your funds over earning the highest interest rate possible, a high-yield savings account may not be the best choice. In this case, a traditional savings account, a money market account, or a high-yield checking account may better suit your needs. Chapter 12. The future of high-yield savings accounts. As the financial landscape continues to evolve, the future of high-yield savings accounts is likely to see a number of changes and innovations. Here are some potential trends that may impact high-yield savings accounts in the future. 1. Increased competition. As high-yield savings accounts continue to grow in popularity, financial institutions are likely to continue competing to offer the highest interest rates and best features to attract customers. This could lead to even higher interest rates and more benefits for savers. 2. New technologies. Advances in financial technology, or fintech, are likely to impact high-yield savings accounts in the future. For example, some fintech companies are already offering high-yield savings accounts that are integrated with budgeting and financial planning tools, making it easier for savers to track and manage their money. 3. Changing interest rate environment. The interest rate environment is always subject to change, and high-yield savings accounts are no exception. If interest rates rise, it could become more difficult for financial institutions to continue offering high yields on savings accounts. However, rising rates could also make high-yield savings accounts even more attractive for savers. 4. Alternative savings options. As the popularity of high-yield savings accounts grows, consumers may begin to consider other alternative savings options. For example, some savers may turn to investment accounts or other financial products to try to earn even higher returns on their money. 5. Potential regulatory changes. As with any financial product, high-yield savings accounts are subject to regulatory oversight. Changes in regulations or government policies could impact the availability or interest rates of high-yield savings accounts. Chapter 13. Recap. Congratulations, you've reached the end of How to Get Started with a High-Yield Savings Account. We hope that this book has provided you with valuable information on the benefits of high-yield savings accounts, how to find the best account for your needs, and how to make the most of your savings. In summary, high-yield savings accounts offer several advantages over traditional savings accounts, including higher interest rates and FDIC insurance protection. To find the best high-yield savings account for your needs, be sure to compare rates and fees from a variety of financial institutions. You should also consider factors such as minimum deposit requirements, withdrawal limitations, and mobile banking capabilities when choosing an account. Once you've opened a high-yield savings account, it's important to develop a savings plan that helps you achieve your financial goals. This may involve setting up automatic deposits, creating a budget, and tracking your progress over time. As with any financial decision, it's important to be informed and to consider your individual financial goals and needs. High-yield savings accounts are not the right choice for everyone, and you should carefully weigh the advantages and disadvantages before opening an account. Finally, it's worth noting that the financial landscape is always changing, and the future of high-yield savings accounts may look different than it does today. It's important to stay informed and to remain open to alternative savings options as your financial needs and goals evolve. Thank you for reading How to Get Started with a High-Yield Savings Account. We hope that this book has helped you on your financial journey, and we wish you the best of luck as you work towards your savings goals. This book that was authored by Open A.I.'s ChatGPT. With the company taking on billions of dollars in investments, this is the perfect time to find out ways for this innovative tool to help you learn how to get started with high-yield savings account. Audio for this book was provided by NaturalSoft Limited's Natural Reader AI software using their commercial license. Per their website, this license allows you to use its software and voices for commercial or public use. This includes, but is not limited to, YouTube videos, public announcements, broadcasts, and e-learning.